IVM.
Storytel is an audiobook platform that lets you hear hundreds of thousands of stories on your mobile, on your PC, wherever you prefer. You can get a great deal by signing up at storytel.com/IVM. This week I'm going to recommend a book called The Pleasure of Finding Things Out. It's a book by Richard P. Feynman. Richard P. Feynman, if you're unaware, is one of the most impressive physicists of the 20th century. He's been a public intellectual. You'll find him in all kinds of videos on YouTube. Really, really fun guy to watch and listen to. This is a series of articles, interviews, essays, all that kind of stuff put together, like, short works put together. Really, really fun read. Definitely check it out. The Pleasure of Finding Things Out by Richard P. Feynman. You can get this on storytel.com/IVM. If you go and sign up from that link, what you'll get is your first month for 99 rupees instead of 299 rupees. That's $200 off your first month. Go check it out, storytel.com/IVM.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and this is the Family Office special. Yes, this is a topic I've always wanted to cover on my podcast because family offices is a very unique proposition that's offered to high net worth individuals and ultra high net worth individuals, and it's something that's evolved over the last 5-10 years, and I'm really thrilled to have one of the oldest players in this business. My guest is Rajmohan Krishnan, principal founder and managing director at Entrust Family Office. Really thrilled to have them. Why? Because Entrust is among the earliest SEBI registered investment advisors. And I'm going to let Rajmohan give us an intro into his own background and the original concept behind Entrust and how it was founded. So Raj, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners. Over to you for an intro.
Hey, Anupam, fantastic to be part of the show. In fact, I've heard a lot about you and the show.
Thank you.
And really happy to be part of this and really happy to contribute for the show.
Sure.
So, in terms of to start with, in fact, I was part of the founding team of Kotak Wealth Management way back. I joined them in 1999, and I moved on from initially I joined in Chennai, then moved to Bangalore, then moved to Delhi. At some point of time, I was almost handling more than 50% of their business.
Wow.
And at some point of time, you always feel saying that, hey, are you adding kind of any value to the client? Because what happens is when you work for a very large kind of an organization, you tend to manage a large set of clients, large set of, people, and it becomes more a man management than actually you do any kind of a value add to a client. And that is where the seed got germinated, because Entrust got germinated, because I was thinking, why not start something which is very, very client-centric and client-aligned, and offer everything. Meaning, as a bank, you can offer only wealth services, meaning in terms of managing investments, but the kind of vagaries, the kind of the day-to-day numbers you'll have to chase doesn't permit you to actually get deeper into a client relationship. So that is where Entrust was born. We thought, saying that it's a kind of an ideal platform which we can offer to some of the affluent clients, a discerning lot, which is in India and which is growing. And we thought, saying that this could be a kind of a great opportunity. And that is when we said, saying that, so that family office was there because I was also part of some of the discussions which happened between Kotak and McKinsey to set up a kind of a family office. And I was also part of many discussions, and I understood a little bit about family office from there. But typically, if you ask me, a corporate with a kind of a huge number target behind, it's very difficult to get a family office in place. You can't, because family office has to be a boutique. It can't grow. It can't become bigger, because the more and more bigger you become, somewhere you compromise on the quality of the service what is being offered to a client. So if you start growing this business like how you grow a wealth management business, somewhere you start diluting the proposition. So that is when we decided, saying that we want to remain a boutique. We want to offer the service to select clients who understand the role of an advisor, who want somebody on their side to manage their affairs, be it investments, be it tax planning, be it real estate, across the spectrum, in terms of whatever is overwhelming for them and they want to continue doing what they are good at, or what they weren't passionate about, and they want all this mundane routine kind of a jobs to be given to an expert who will offer these kind of services to them. It's a very, very long
Yeah.
term business. It is not something which you start today and probably see some kind of a growth tomorrow.
Yeah.
So it's a and over the last 7 years we have grown very slowly, very steadily, and today we work with a very close set of clients across Bangalore. Of course, Bangalore is our headquarters. Chennai, Mumbai, Delhi, and Cochin.
Sure. It's very interesting that because you're the first guy that I've met on my show, that I've got on my show, that I get this feeling, this idea that this is not an AUM business. Whereas, if I'm typically, say, talking to an individual advisor or to a mutual fund or even to a startup platform that aggregates mutual funds, it's all about trying to get more clients, trying to increase your AUM and scaling the business that way. Whereas what you're saying, very unique, is that you'd prefer to be with a select group of clients and have close relationships with them and be a boutique outfit. So just to get more perspectives on this very unique clientele, so to say, can you tell our listeners what exactly is a family office? Because back in 2013, I don't think this concept was, or probably it was very well known, but it was being addressed by other people. It could probably be addressed by wealth managers of, say, NBFCs or banks, or I don't know how things were done. So could you just give our listeners a landscape of how this entire industry has shaped out, right? Because I'm guessing that, today, if I look at the aggregate AUMs of all family offices in India, pretty sure it runs into billions of dollars.
Okay, so here you go. So the family office is a completely new concept to India, but I want to just take you back to some large family offices internationally. Take the Rockefeller Family Office. Take the Melinda Gates Foundation, which is Bill Gates Family Office. You can go into Mark Zuckerberg's family office. So these are offices of the large ultra HNI families. These are personal offices of large families. These are extensions of the family, which takes care of their interests. When you say interests, it could be philanthropy, it could be investments, it could be their interest in real estate, it could be their interest in art, it could be their interest in social investing. It could be anything for that matter. It depends on the head of the family, or the main members of the family, what they think their money should deliver. The money should multiply, or the money should probably be used for creating a better world, or to make kind of a multiply and make big returns, or have an impact in the society by creating more and more entrepreneurs, by putting money into startups. So this is an extension of the family. So that's how this family office came in. It's a very abused word today in India, because everybody, Tom, Dick, and Harry, call themselves a kind of a family office. I'm
Okay.
sorry to use this, but seriously, it's not that way. It is basically because family office is, you need to understand what the family mean, what money means to the family, what the family wants their money to be at,
Mm.
and what it all means. Like, for example, what is the kind of lifestyle the family wants to achieve? Do they want to be subdued? Do they want to buy an aircraft and probably fly? What do you say? There's nothing wrong. Basically,
Yeah,
see,
no,
everybody's philosophy is different.
yeah.
Okay, and that you need to understand the family quite well. Like, there are a lot of families who saying that my job, I've made this money because I've built a company, and there are people who supported me to build this company, and I want to create entrepreneurs. I want to help entrepreneurs. I want to invest into startups, mentor them, and make sure that these guys become billionaires. So this could be the philosophy. So there
Yeah.
could be a family who saying that, hey, I made a lot of money and I want to give it back to the society. I've got 5 causes. Okay, it could be kind of like, for example, Bill and Melinda Gates. They work very, very much on poverty, very much on cancer, very much on various kind of causes. Okay, somebody will work on water, somebody could work on governance, somebody could work on elderly care. There are many, many causes in which people want to work with. So understanding the family's mission, the legacy, what they want the money to be there, money to do, is very important to be doing this family office as a business.
Yeah.
So that means that how many families one can manage?
Yeah.
Can you do this as a commodity?
Oh, I don't think
And
you.
and one more thing very important is like typically, what if suppose you start a family office company and you start signing up more and more and more and more clients. You take private equity to grow. So what happens tomorrow? So will you? So what? Why private equity guys are investing into this company? Because they want to see returns. So at some point of time, you are trying to sell this company. So the family has come because they trust in you. They trust in what you bring into the table. They trust the organization because they relate to you. Okay, and they're exposed naked to you. They've told everything about them. And suppose tomorrow this firm gets sold to somebody else, what happens to the what do you say? All the trust which the family reposes on you. So family office has to be boutique, has to be small, can't grow disproportionately.
Very interesting. I was, in fact, I was just wondering, and I'll probably come back to you with this question on the second part, on the other side of this break. But just before I go, Raj, I want to just understand the scope of services and probably the expertise that you offer to your clients, because as you said, this is about someone who, say, sold his startup and he's probably sitting on, I don't know, maybe say $100 million out there in Bangalore, and he doesn't know what to do, and he would come to you. Now, obviously, that's a very different proposition from, say, the average questions that I get, which is which mutual funds should I invest in. So tell us, Raj, what is the expertise that you guys bring to the table as compared to, say, maybe your previous role, maybe an investment banker or a wealth manager or a large bank or anything that would help our listeners understand the kind of value that you add to your clients?
So it's like this: a family office can be an amalgamation of services, or you can be a kind of a conglomerate of all the services. It depends on how do you want to build it. I would like to very clearly focus on interest and how we have built it. Okay, so we started off as an investment advisor because all of us are bankers. Like here, I want to bring in Shashank because Shashank joined us. He's a co-founder of the firm. He joined us 1 year later when Interest was started, and he has got humongous experience in managing equities and also an expert in terms of the field of unlisted investments. So, and Shashank and me go a very long way. We have worked like more than like brothers in our previous kind of an organization. We respect each other for what we bring into the table, and we decided saying that, hey, why not we what do you say, work together and offer our expertise to the clients. So when Entrust started, we started as an investment advisory firm because most of us, like we knew or we hired, were all specialists in terms of investments because either they came from Kotak or they came from somewhere else. They all of them had experience, very deep kind of an experience in investment as a forte. But what we realized as we went by, clients started depending on us more and more. They started saying that, hey, I've got some real estate. Why don't you insure? Saying that you guys sell this or you rent it out, or there's a tenant who has come in. I don't have the time to look into the legal papers. Can you just make a lease agreement? Can you negotiate on my behalf? So once we started realizing, saying that, hey, the clients have started looking at you for other services. As and when the opportunity came in, we started building that vertical. We said, okay, real estate came in, so we started building a real estate vertical. Okay, then what happened was people came in with taxation requirements and accounting requirements. He said, saying that, hey, in fact, we just go to the auditor at the time of March to file our returns, but most of the time we go back and forth. We don't have kind of a proper information, and the auditor keeps asking us questions. I've been extremely busy, and I don't know what is my short-term gains, what are my long-term gains. Like, for example, last year I sold a property. I don't know whether I'm in the money or I need to pay some taxes. So why don't you guys just take over this and ensure saying that I pay tax appropriately and I don't overpay or underpay, and at the same time my books are kept very neat, and also ensure saying that very what do you say, it's very tax efficient in terms of what we do. So that is when we built a kind of a in-house we recruited chartered accountants. We said saying that, hey, let us provide this service for the client, and we built family CFO services. And we added taxation to that, and we from time to time we went back to clients and we said saying that, hey, this is the advanced tax you're paying, but I think you're paying very disproportionately high because your auditor does not have enough details. So why don't we probably give you the proper details? So clients started appreciating. They said, hey, after you guys coming in, I think things have become more regularized, more organized. I think I'm seeing the kind of a benefit. Then came in saying that philanthropy, saying that, hey, clients started saying, till date, I've been probably giving to my driver's family, I've been giving to my maid's family and all that, but I have certain causes in mind. Can you just identify some organizations where I can start, donating money, or also find out whether some NGOs where I can contribute? And they started giving causes. Like, for example, somebody said disabled, somebody said mentally disabled, somebody physically disabled, somebody could say water, somebody could say, so various causes. So we started working with some consultants. We said saying that we appointed somebody in-house to work with some consultants and identify kind of areas where these guys can donate, and went back to the clients and said, this is the kind of organizations which we are working with. This is on some of them are really good and they're above board, and we have checked their kind of the kind of money which is put to use. What is your contribution and how much is going to the actual cost? All that we started giving them. So one by one, it started coming, and clients started depending on us. We started building capabilities. By
Very.
fourth year or fifth year, we were a full-fledged kind of a family office. Okay, like for example, we had a legal team which could take care of the estate planning, legal services, company secretarial services. We had a full-fledged accounting team which can take care of taxation and accounting. We had a real estate team. We had a completely an investment team, and we also had among the investment team we had a brilliant team for exploring startup investments, and being part of the startup ecosystem, where we gave an exposure for the clients to directly invest into startups, where our role will be not only doing diligence on those companies, but also forming part of the being a board observer in the companies, ensuring that the performance of the companies gets reported to the clients, and also added value to the company by probably bringing some kind of an ecosystem. So we have become a complete family office in the year 5, just because the clients wanted more and more delivered by us.
Sure. It's very interesting. I'm actually going to get to the specific services on the other side of this break, Raj, because, it just sounds the way from whatever you've told me, and help me, understand this right. You actually become like probably a CFO for the entire wealth and fortune of, say, a family, let probably someone who has sold out a stake in his startup of $100 million or whatever the number might be, or an SME that's doing really well. You guys actually go the entire spectrum from tax management to estate planning to every possible thing. Am I right in understanding that?
Absolutely.
Wow.
Absolutely. So we go to the entire spectrum. And these are some of the things which are really a corporate kind of a service which I'm talking about. Like, for example, if you have real estate, you have CBRE, you have, the large real estate firms, domestic and international, which takes care of that. You have taxation, you have Dhruva advisors, you have some of the big four who are doing tax advisory to clients. So there are a lot of things which a corporate, like for example, we help clients in relocation.
Okay.
We help clients in probably doing renovation of the house.
Goes
Like
right
we
down to
identify
that.
the architect. Yes, we identify an architect. We supervise the entire work. We keep reporting to the client. Of course, because see what happens is the first point of contact for any client for anything for that matter is family office. I will tell you a very interesting thing. This happened about a couple of years back when a client came back and told me saying that, hey, my daughter has just completed her, post graduation, and she's ready to probably take up. I want you to spend some time mentoring her in terms of for the businesses. Also, at the same time, you have a lot of families whom you know who are like really good top class kind of a families, professional families. would you also just let me know if there is a nice guy who will probably be ready to marry my daughter? And this is the trust the family has got with the family office advisor. So they come to you with such a request. And so these can't be listed and saying that, hey, family office, these are things which we do. But a family office is a kind of a custodian and a confidant for the family.
Huh, Raj, that really sounds like some pretty intensive stuff that you guys do for your clients. And I'm going to get into specifics on the other side of this break. Folks, don't go anywhere. We'll be right back. This is the Family Office special with Rajmohan Krishnan, Principal Founder and Managing Director at Entrust Family Office. Don't go anywhere. We'll be right back.
Hello, everybody. Welcome to another very special week on the IVM Podcast Network. Before I get to that, let me quickly thank our sponsors on the network this week. Storytel, thewholetruthfoods.com, and we have a new sponsor in Syed. Thank you all so much for being part of the network. So, this is Valentine's week, and we have a bunch of stuff for you guys. So I'm going to give you a couple of episodes that you could definitely catch up with. Agla Station, Season 2, Episode 12, Be Our Valentine. Ritasha and Ayushi have a little bit of talk about love and all the rest of the stuff that goes wrong with that. On The Habit Coach, Episode 396, Ashton Doctor did an episode which went into the much-debated origins of Valentine's Day. Also, do check out Candid Kannan with Siddharth Kannan featuring Govinda and his wife Sunita Ahuja. He talks to them about amazing 33 years together. But you know what, folks? If you want to hear more about these Valentine's Day things, what I suggest is go to our webpage, ivmpodcast.com/blog. And on the blog, we're going to post a bunch of different playlists that we've created for all the various major services. So if you're feeling in the mood for love, do check that out. You'll definitely enjoy it. Just a quick note on a few other noteworthy episodes this week. Nankari Kunal Vijayakar was the guest. They spoke about street food with him. On Simplified, they talk about vaccinating 1 billion people, then the logistical and administrative task in front of us. And on the Wire Talk, Siddharth talks to Devdutt Mukhopadhyay about the human cost of internet shutdowns. And with that, let me get you back to your show.
And welcome back to this really special episode of Paisa Vaisa, the Family Office special. My guest, Rajmohan Krishnan, Principal Founder and Managing Director, Entrust Family Office. In the first part of this episode, we were talking about basics. What does a family office do? And the really rich vintage that Entrust Family Office has in, they were among the first people on in the industry. They've been founded by veterans from the private wealth side. So, Raj, welcome back. Now, I want you to give our listeners a little bit more specific, a little bit more clear ideas about the kind of services that you offer. Let's say that I'm a client. Let's say that I'm someone who's made a lot of money selling my startup, or actually, you know what, maybe a very successful SME, and I come to you for the very first time. Can you walk us through the process to get things started, to get our engagement started? What are the kind of questions that you would ask me before we start our engagement, and just so that our listeners can get an idea? Go on.
Yeah. Anupam. So what we do is when a client approaches, or when we approach a client through some reference or something like that, we speak to the client, we understand what is that he is expecting an advisor to do. So principally, we would like to understand from him, saying that where this money has come from, what is the kind of business was he into, what he intends doing after this, like he's made an exit, whether he wants to continue doing something or he wants to just retire and keep managing this money. So it's very, very important to have a very intense discussion with the client. Now, this discussion is even a prelude to what we are going to present to him about Entrust. And once we are completely aware about what he is going to do, what is the kind of money he's got, what he thinks about, his money has to do, and his family background, his professional background, where is he coming from, what, everything. So it's a very intense kind of a discussion which we have. And after that, we present Entrust to him. We present our credentials to him, what we have done for clients, and across the spectrum in terms of whether it's investments, whether it could be non-investments. So we take them through with kind of some of the live examples what we have done, and make him understand, saying that this is our capabilities. Now, once the pitch is over, meaning we talk about us, introduce the team members, and each of them come with their expertise, and all of them, like for example, family office. You can't have rookies in family office. You need to have veterans in family office. So basically, our interest, the kind of team what we have is most of them are more than about 20, 25 years kind of an experience in the industry. So they've all put in long years. They've seen, if you look at investment, they've seen cycles, market cycles. They understand how the markets behave. If the market is kind of a crashing, what needs to be done, whether you need to be worried or they need to be stable, or if the market is just going up like what have happened in the last about 2-3 months, how do you react to situations? So all this is something which is very important. So we give a lot of importance to vintage. So we showcase that vintage to clients. And we saying that, hey, this is what is our kind of a team which comprises of. And that gives them a lot of confidence, saying that, yes, these guys are really seasoned professionals whom we are talking about. And then if he decides to engage with us, the next is we saying that if he has got an existing portfolio, we try to take the portfolio and do a kind of an assessment of the portfolio. It's called portfolio audit. We study the portfolio and we find saying that how the portfolio has performed over a last period of time, and what is the kind of risk he has taken, what is the kind of cost he has incurred to manage the portfolio, and what is the kind of what is the time frame the portfolio has lasted, meaning people have just left, right, and center and invested in products which are 5, 7, 9 years, 10 years, 12 years. We understand saying that how far these guys have locked in into some of these investments. So this is very, very important to understand how the client has reacted in his investments, and study the portfolio and present it to him, saying that, show the mirror, saying that, hey, this is how the portfolio has performed. This is the weaknesses, this is the strength of the portfolio, what you have, and also give them a view saying that if we have done, how we would have managed this portfolio. Okay, so that is on the investment side. And also try and understand from him, saying that whether he is real estate heavy, whether, what do you say, what is the kind of, is he has already invested in some startups, or he's thinking of investing in some kind of a startups, and what he intends doing, like for example, he's got some idea of investing into some, what do you say, contributing something to the society. Does he want to probably allocate some money into philanthropy, or if he wants to do some kind of a social investing, whether he's got a trust, whether it's a charitable trust or a private trust, all that goes with the discussion. Once the discussion is complete, it can run into one meeting to about 5, 6, 7 meetings. Okay, and because it's a very, very long-term relationship, so it can't be done. There's no cookie cutter method in this. Okay, so we don't shortcut this. And we tell the client saying that don't be in a hurry. Don't be expecting everything to happen overnight, because we don't want to jump the gun. Okay, we want to understand thoroughly about you, about your family, about your investment thesis, about your philosophies. Everything is very, very important.
So I have to ask you this, Raj, because you would have seen the portfolios of all these people. What are maybe a few random examples of stuff that really surprised you? I mean, the impression that we have, and if I go just by RBI data, then we know that India primarily is obsessed with this whole financial versus physical asset thing. So the real estate heavy, gold heavy. Is that also generally the trend that you've seen in the people that you advise? I mean, just on an average?
See, actually, it depends on the type of clients. Like there are 2, 3 types of clients are there. Okay, one is first generation entrepreneurs, or maybe I would say the second generation entrepreneurs. Okay, the first generation may be about 60, second generation could be about 25, 30 kind of a thing. And there are family businesses where people are third generation, fourth generation, or father, grandfather would have started and they've inherited. Wherever there is, family businesses are involved, they're all neck deep in real estate.
Actually, huh?
Neck deep in real estate. Yes. Like they continue investing in real estate. Sometimes you don't even understand saying that why they are investing into real estate. Okay, what is that so fascinating about real estate, which they keep investing in? Like for example,
and when you say real estate, you'll be like, maybe they've bought tracts of agri-land. Maybe they've bought all kinds of stuff.
No, it could be anything, random stuff. They could be commercial, they could be residential plots, they could be houses, they could be villas, they could be commercial properties. Wow. They just, whenever there is some money, they'll also saying that, hey, why don't I put this money into real estate? We keep on telling people saying that, hey, it's not listed. Okay, real estate is not listed. You don't even know saying that whether your money is appreciating or depreciating.
And I'm guessing a blended yield on that entire real estate piece would be what, 2%, 4%, 7%, depending on what
It's
would be.
very, it's not easy to say, but see, there are a lot of things. Like for example, you have real estate is completely illiquid. The day you want to sell, you'll never be able to sell. Okay. And
Yeah.
the number one. Number two is it's extremely complicated in terms of not only paperwork in India, even today, the registration process, it's not clean, it's not above board. So you'll have to still, handle what do you say, the dirty part of it.
Oh,
Okay.
yeah,
So,
yeah,
so
yeah.
typically, it's not a very easy kind of a thing when somebody wants to handle real estate. Number one. Number two is it's very difficult to manage because you have multiple real estate. And tomorrow, like typically your sons today, most of the younger generation are going abroad. Okay. And they want to study there. They want to build a career there. And they're not going to come back and manage your real estate. Okay, and they don't want to be going behind and collecting rents and talking to various people and fighting out the legal issues. Going to the court and getting it solved and all that. Nobody is interested. So somehow, this fascination of real estate at times you're surprised and you're very shocked also to hear. Okay,
Yeah.
but that's not the case with your first generation or maybe the second generation families. Most of them have got real estate, but very, very selective. Like typically, they would buy one or two houses max in terms of their, to live in. And maybe like one international property if they have some international interest, the kids might be abroad or something like that, or at the most only that much, meaning they don't want to invest in real estate and keep managing this kind of an affairs. And most of them want to be in liquid assets. Like typically, it could be a financial asset, and even gold, for example. Yeah, they want to invest in ETFs and not just buy physical gold and keep storing it in your bank lockers.
Sure.
That's not the idea with the first and second generation entrepreneurs.
Sure. So now, last two questions on this episode. So I want to start with diversification, right? In terms of financial products only now, because we've spoken enough about real estate. I think we've got a fair enough idea about gold also. What are the kinds of financial products do you recommend to family offices? Of course, keeping in mind that each one, as you said, and you've emphasized throughout, is very unique, is very different, and therefore what works for one might not work for the other. But in general, if I am talking about stuff like investing in startups or maybe international investing, in general, what are the financial products that you advise to these clients, that you recommend to them?
See, when it comes to asset classes, okay, there are only four major asset classes which is available. One is equity, the second one is fixed income, the third one is commodities, and the fourth one is real estate.
Okay.
So these are the four asset classes which is available. Though people say art is an asset class, but it's a very, very, it's a lifestyle oriented asset class. People are not, not everybody is interested in art. Not everybody will understand art. So you will have to obviously diversify amongst this, whether it's domestic or international. Okay, you'll have to view it only this way. Okay, now, and when you dissect equity, then again you have mutual funds, you could have stock investments. Now, in the stock investments, you could probably invest in PMSs, or you can invest in alternate investment funds, or you can get into something like a kind of a long shot. But all this is part of equity, meaning
Sure.
it's a subset of equity. Okay, so you can have in any form like hedge fund or something like that. It's all of equity. Okay, now obviously your all this anything which is very fancy and which is very difficult to understand, we allocate very minimum into it. So,
Okay.
whatever product which you can't understand, which anybody layman can't understand, we will not just go cartloads into it. We will have minimum kind of an investment, even if somebody is insisting saying that I want to diversify. So that puts you into only one, two, three asset classes like equity. Equity meaning stock investments. It could be through mutual funds or your so direct stocks, which is
Sure.
could be through PMSs or AIFs, and your fixed income. Fixed income will be majority. It could be through bonds or mutual funds. These are the two areas where you will invest. There are other products which just come in, like for example, off late You have a high risk debt. It's a category which is got momentum, where what do you say, mezzanine debt for investing into startups, for investing into real estate, which is called mezz debt, which is again come in, which is carries, though it's called debt, it's got equity risk, huge kind of a risk which is available. So we would not classify that as debt. All these investments will be very, very minimal in terms of probably our allocation. But and again, it depends on the client. The client says, if he says saying that, hey, I don't want asset allocation, I want all my money in equity, I want all my money in risky products. We will actually administer the client into a risk profiler and show the mirror saying that, hey, this is what the risk profiler says. You want to follow this, or do you want to probably have your own thought process? There are a lot of people, majority of them follow that risk profiler. Some people say saying that, hey, chuck the risk profiler, just listen to what I say. I want all my money to be in equities. I've got enough real estate to take care of my fixed income portion. Just put money into equities. Then we go by them. We go by the recommendation and then diversify into investments. So that's the kind of diversity. Yeah, of course, international also is fallen into the same category, because today, if you look at post-COVID, post what do you say, the kind of a great financial crisis, what has happened is people have started diversifying investments into international investing. But of course, you have only LRS as a vehicle, which is $250,000, which is possible maximum by a single individual for a year. And this money has to be, transferred to an international account and invested from there. But again, when the money goes there, it has to be invested into only these kind of opportunities. But again, international is a kind of a landmine. It's not easy to manage. It's not just like your domestic investments. It has got its own vagaries. You have dollar to be worried about, because the dollar fluctuation can affect your international returns. So there is enough complications in international. So we'll be extremely careful in terms of assessing somebody's risk profile before even we suggesting what needs to be done.
Understood. So, Raj, I want to wrap up this episode today, if for our listeners, with just a very simple question out here. If, maybe some of our listeners out there are actually going out and choosing family offices, and what would be your checklist? Right? I mean, or what would be maybe the 3 or 4 or 5 questions that you think that you should definitely ask a family office before signing them up? Just let's wrap up on this note of very specific advice, maybe a checklist.
No, one is the most important thing is, what does money mean to them? How do they want to manage money? Okay, there could be customers who want to be extremely conservative. They're saying, you need to be conservative and protect my wealth, or it's a growth capital. I want to grow my capital. Like somebody has got 100 crores, and they saying that I'm very much fine if suppose it beats the inflation by about 1 or 2%. There could be clients who will saying that I have a target of 3 years for that 100 to become 200. No, these are different clients and their different thought processes. We need to understand before even we sign up. If suppose somebody says, I want 100 to become 200 in 3 years, then we will maybe stay away. We will not probably take that account. And we will saying that we are not into that race.
Interesting. So you're putting this back on the client, saying that the client needs to introspect first and, figure out his needs and say that, okay, I'm coming to you with this AUM, could be, whatever, 5, 10, 50, 100 crores. And my objectives are, let's say 1, 2, 3. Preservation of capital could be the first one, very first one. That is primary. I cannot take even a 1 rupee loss. Okay.
Correct.
So let's say that I start with that. That for me, preservation of capital is important. Maybe I'm, someone in my mid 40s or late 40s, and I'm looking at really setting aside a fairly large corpus over maybe 20, 25 year time frame, because let's say that I am 40 or 45, and by the time I'm 60, 65 or 70, I want my corpus to grow at a reasonable rate. So first, preservation of capital. Second, beat inflation, like you said, just beat inflation for me by 1-2%. And third priority could be, I don't know, just help me out. Maybe trust, liquidity. Yeah, liquidity. There you go. That I don't want to get stuck into stuff that's that's difficult to liquidate. So if I give you these 3, if these are my 3 priorities, okay, what do you think should be the questions I should be asking my family office for the capabilities that they have? Let's make this a little bit more specific, if that makes sense to you.
No, capabilities is basically you need to understand saying that who are the people behind. Okay, that's very important. Okay. Now, the second question is, if you ask me, I will ask a family office, are you funded?
Wow. Very interesting. So when you say funded, what do you mean by that?
If
What's your
a
balance
private
sheet?
if a private equity guy has invested into a family office,
Ah,
I would like to stay away from that. I'll tell you why. I've got a
okay.
reason, and I gave you this reason in the first
Is in the first, yeah, yeah.
conversation.
I remember that. And I'm glad that you're expanding on this. Yeah, yeah, go on. Sorry.
You know what happens when somebody takes money from public or private equity guys or anybody for that matter? Why does I invest into a company? For me to make returns
Hmm.
and in reasonable time.
Hmm.
So I will not wait for 25 years to make returns. I will obviously want to make returns in 5, 7, 9 years. That
Yep.
means I'm looking at an exit, and where
Makes
this
sense.
exit is going to come. This exit is going to come. And what will I base my investment decision on? My investment decision is based on EBITDA. My investment decision is based on the kind of assets, the kind of revenue. A family office doesn't work that way. It doesn't
Wow.
produce revenue the way you want to because it's a long term, trust oriented business. I will,
Wow.
from day one, I will not put my foot down and say, if you pay me so much, I will do business. Yeah, first
Very
of all,
interesting.
the client needs to understand me. The client needs to trust me. Though people, he would have taken reference, he would have done this, he would have heard whatever hear and say. Like typically, I'll give you an example. If suppose
Sure.
tomorrow somebody comes to you and say you're constructing a house, you say saying that kindly refer me to a good architect and a contractor. Somebody refers to you, two people. Okay, you will take some references, you will call the references, and you will find out saying that how your experience has been. But don't you think you will start gaining trust that when you saw them working with you? The first 6 months is when you understand saying that, hey, these guys are time conscious, they do their work properly, they execute to perfection in terms of whatever I have told, they don't deviate much, and they're putting good quality materials. All this is done over a period of time. So basically, a family office will get trust. The client will get trust to the family office. It'll take 2 to 3 years or even 4 years time.
Wow.
And
So,
before that, you can't be asking saying that, hey, you come with me. Why don't you increase my fees? Why don't you pay me more money? That's not the way this business works. So how will it work in an Excel sheet? It is like all the startups do. They say saying that hey, first year 15%, next year 25%, next year 30%. I don't think this business works that way. So my first question I will ask as an investor to a family office saying that, hey, what is your background? How many clients do you manage? Who are the people behind? What is the type of clients you have? And whether you have funded, are you funded? Okay, what is a long term proposition? What if you sell off to somebody saying that I am investing because I know that you are there? Tomorrow, what is a guarantee that you're going to be there? What is a succession?
it's very interesting.
Who's going to take forward this business from you tomorrow? If suppose you exit, you give it to somebody whom I don't like at all, an organization.
You're right, right? Because I I face this with my relationship manager at my bank who changes every year. Yeah, I mean, I can't. You're right. No, you're absolutely right about this. So, this is something that's totally counterintuitive, probably because we don't, understand from your perspective. So, I'm guessing, Raj, that if I come to you and I ask and I start asking you things like, "Okay, what kind of return can you give to me?" That's my first question. Would that kind of piss you off?
I would not say piss me off. As an investor, you're right in asking that question.
No,
But
but as a
obviously,
starting point.
as a starting point, if somebody is asking really, then I will know saying that he's not understood what is a family office.
Uh,
Yes, 100%.
wow,
Then
that is,
that means that he's looking for an investment advisor or a wealth manager.
wow, yeah. So let me just wrap, let me just recount this and just add your points here, Raj. Okay, so first question is, what is your background? What is the vintage? What is the caliber? What is your pedigree? The kind of people who are running this, where have you guys come from? That should probably be my first thing. Of course, after figuring out about the private equity part that you just said. Second is how do you, how will you handle my money? Or what is your succession plan if tomorrow, if someone from your office leaves, and who will take over and whether I will get along? So I think that would be second. Any other thing that you want to add out here, just off top of your mind?
No, I'm basically saying that what are your capabilities? Like
Mm.
I would want to know some 6 to 7 instances where you have managed different what do you say life situations. Like, for example, if you say real estate, what are the different real estate deals have you done? If you say I'm good in setting up private trusts, what is the kind of private trust you have done? And what is the different complicated, what do you say, situations have you come across? And if you saying that I've done taxation or I've done accounting, what is the capability? Like, why do you think that you're better than my child accountant? These are some of the issues which I would want to know. Like if I say private equity, understand from them saying that what is your philosophy? Where do you invest in terms of private equity? What is your contribution? Maybe talk to some of the clients who has invested and probably get a kind of a reference to understand. And very important is succession. Meaning tomorrow, if somebody is not there, who's going to manage it? It's like wedding, right? Like I get married to you, and I want my son to be managed. I introduce everything. I'm stripping naked in front of you, and tomorrow, if you just go and do something with somebody else, and you give off your company to somebody else and walk away, what happens?
Wow, that's a big one. That is a big no. You're right. I
And
mean, if I have founded my business only for the purpose of selling it off after 10 years, then yeah, you're right. You're right. You're absolutely right. Go on.
and yeah, absolutely. And family office. Why should you grow beyond a point?
Yeah.
Because see, I'll tell you something. If you're giving great service for a family, you can't do this for 100 people. You can't.
Logically,
In-
no, you're right. You're right. You're right. I mean,
impossible to do it. I can bet it.
and that's what makes a client sticky with you, right? I mean, you're literally
Absolutely.
holding him through his lifetime. I mean, I'm sure, and help me out here. You would even probably get queries that my kid wants to do his undergrad in the US. Can you give me a good college? Do you get queries like that?
Absolutely. Education,
Wow.
mentoring, business opportunities, everything for
Amazing.
that matter. From a very trivial issue to probably something as complicated as anything. We get
As a
we keep getting what do you say queries.
as a merger or an acquisition or some
Yeah,
expansion. Amazing.
yeah.
So that is, that's this brings it really personal here. Maybe so like, and you just gave the anecdote, right? In the first half of someone actually coming to you and saying that we want to get our kid married. Can you help us? I mean, how more personal can it get? My
Yeah,
kid wants to go
absolutely.
to US, help us. My kid wants to get married, help us. Now that is a kind of relationship I think that is very unique that I don't think your typical, investment bank or a wealth bank, or a wealth manager can handle. Fantastic, Raj. This
And,
is
and, and most important is family office is all about empathy. It is not about your financial brilliance. There are 150 fund managers out there who are brilliant. But do you want to deal with all of them? You want to deal with a very empathetic person who will understand the
wow.
family. Who will understand. That's the most important thing about family office. It's
I
not
don't
about
get this. I don't get this on my show at all. Yeah, my show, people are just talking about rate of returns beating in in inflation. Where is the Sensex going? But you've hit the nail on the head. Empathy. Can
it's very,
you
very
be
important.
in my shoes and understand what I'm going through? Is that what you're talking about?
Absolutely.
Wow.
And everything is summed up in that, right? Like, for example, I'm in the investor shoes. I will know
Mhm.
exactly what does he want, and I'll work on his behalf to get his returns.
Yeah, yeah, yeah.
So empathy sums it up everything because that's a most important characteristic of a family office.
Yeah, I'm just amazed because the average guest on my show, or the average issue, sorry, not guest, the average guest on my show is more, the average issue on my show is more towards the retail audience. But what you're saying as a concept applies to a retail investor also.
It
Can
is.
my advisor understand where I'm coming from? Or is his motive in life only about getting all my money, putting it into some schemes here and there, giving me some kind of return, and that's it. After 5 years, 6 years, 7 years, he's gone. Whereas what I should be looking at, okay, and I'm taking this
Ve-
idea from you, Raj, is
Very
a
true.
long-term relationship over 5, 10, 15, 20 years, watching me grow in my life and being next to me, helping me through these decisions. Would I be right in saying
Yes,
this?
absolutely. You're hit the nail, actually.
Man,
That's the right thing, actually.
if
That's the right
investment
thing.
advisors can be in these shoes, I can tell you the quality of advice that we get in India would be significantly different. And I'm saying this in general, because I'm pretty sure that what applies at a concept level, by the way, not at an execution level, at a concept level for someone who's got a 100 crore portfolio versus someone who's got maybe even a 1 lakh portfolio is the same. I mean, empathy, probity, honesty, sincerity, and being there for your client over the long term.
And you know something, I always believe that, like for example, the regulators have a lot of exams to qualify for you to advise. I really feel there should be a kind of a qualifying factor for the software issues also,
uh, it's
because that
hard
is the
to
most
capture that,
important thing.
right?
No, but you have to find a way to capture it, because I believe that that's the most important thing, because otherwise you'll end up probably spoiling the client completely, and you have a
Imagine
lot
that.
of
Huh?
dissatisfied investors only because of that.
Yeah. I mean, when I take a step back and think about it, if all the professionals in a life, so maybe a doctor, a lawyer, my trainer, who comes, the trainer at the gym, if all of them could be this involved and have this level of empathy, I think lives
It
could
is
change.
it is very important. I completely with you. Every time when I deal with a contractor, and with anybody for that matter, whether it's a doctor, like the minute you go to a doctor, he will say, he will not even hesitate. He will say, I think surgery is the only solution.
I hear you. I've been there, done that. I know what you're talking about. Yeah. I mean,
And believe me, I'm telling you, it is for him. He has to achieve his number of surgeries target.
I hear you. Yeah. I yearn for that doctor who can at least sit me down and give me just 5 minutes of his time, rather than just make a list of whatever prescription is there and just shoo me away. I get what you're saying, man. This discussion can go on and on. But
On
Raj,
and
thank you
on.
so much. Yeah, no, thank you so much. I hope maybe hope to have you back maybe after a while, and maybe we can discuss more about the role of empathy in investment advice. Love that as a topic. So, folks, that is a wrap on this episode of Paisa Vaisa. Very unique, very different episode. My guest, Rajmohan Krishnan, principal founder and managing director at Entrust Family Office. Guys, please check out the website. There's a lot of material out there. There's some links to some very interesting articles. There's, of course, their team profile also. And it's always good to have veterans on the show, because these are people who've seen, like Raj was saying, cycles over long periods of time. So, like I said, the firm's name is Entrust Family Office. My guest, Rajmohan Krishnan, principal founder and managing director. Raj, thank you so much for doing this for our listeners.
Thank you, Anupam. It has been a wonderful kind of a discussion what I had. I really thoroughly enjoyed this kind of a discussion. You gave me an opportunity to actually share my thoughts, my kind of an ideas of what is family office is all about, and what one needs to even explore when they are looking for a family office advisor. Thank you.
It's great to have someone on the show who's deeply passionate about his topic, about his business, and who takes his business to be actually a part of his life. So Raj, thank you so much.
Thank you very much.
Great. Folks, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I am B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Want to learn something new and have a few minutes to spare? Well, then go for the Traveling Professor's Diary, where I, Siddharth Deshmukh, the Traveling Professor, will help you glean from all the insights that I've gained from wherever I've traveled, learned, taught, and repeated. Join me every Tuesday and Thursday on the IVM Podcast website, app, or wherever you get your podcasts from.
जिंदगी डायरीज के पन्नों में कुछ पुरानी यादें, समुंदर किनारे झूमते दरख्त, जवां दिल की धड़कनें और अनजान मुलाकातें हैं। तो आइए खोलिए मेरे साथ जिंदगी डायरी के पन्ने और साथ ही खुलकर जीते हैं जिंदगी। आप सुन सकते हैं जिंदगी डायरीज IVM पॉडकास्ट ऐप या वेबसाइट पर, या जहां कहीं से भी आप अपने पॉडकास्ट सुनते हो।